Simply because you have low income doesn't mean that you can't qualify for a credit card. So if people are telling you, hey, your income is too low, you can't qualify for a credit card, tell them they're full of it. Okay? Because in today's conversation, I really want to explain to you how to get a credit card, even if you have low income. And even if your income is not steady, if you're having problems, if things are fluctuating, you can still qualify for a credit card. Let's talk about that. Let me first give you an overview here so we are clear about the conversation. See, you have to understand, there is an important element when it comes to credit card qualification, and that important element is income. Now, income does not mean that you have to have a full-time, steady, 9-to-5 job, going to work in the morning and coming back in the evening. Lenders and credit card issuers, for that matter, they're not really interested in that. Of course, they want you to have steady income. They want you to have stability in your finances, but they're more interested in how much you're pulling every month overall. So, I mean, they don't care for real. They don't care if you work 1,000 jobs or you work 2 jobs or 3 jobs. They really don't care. They just care about the stability of your income. So you got to really pay attention to things like DTI, your debt to income ratio, because when we talk about your income, we have to talk about your debt to income ratio. Why is that important? See, I started by telling you, if you have low income, you can still qualify for a personal credit card. Okay, now your debt to income ratio can work in your favor, because if you have low income but your expenses overall are also low, if you have if you can maintain a low level of spending pattern, then your DTI, your debt to income ratio, will be low also. And I want you to contrast that with somebody who is making a lot of cash. The person is making $100,000, but they're spending like crazy. Like they're spending like $80,000, $85,000, and the last thing you know, their ass is on fire because they actually filed for bankruptcy. That's because the DTI is so high. Okay, so if you have low income but your DTI is low, let's say your DTI is around 20% or 25%, you can still qualify. It just means that you are able to manage your finances better. And the credit card issuer, they actually love that. They love that. This a lot. By the way, boss, welcome back to the show. It's really a pleasure to have you here. I love having this kind of conversations every now and then. So when we talk about credit card application, pay attention to your DTI. It's not about income. It's not about income. If anybody tells you have low income, you can't qualify, tell them they're full of it. Like I said before, tell them they are full of it. Because what matters is your DTI, your debt to income ratio. Now, let's talk about money. Boss, you have to really think about what's really important. Money. What's really, do you have, when I talk about you have low income, okay, do you have savings? Do you have an emergency fund? Do you have something to really fall back on? Talk to me about that, boss. Talk to me about that. Okay, boss, what's really happening right now in terms of your household income? Do you have a spouse? Are you living with someone? Do you have children? Because see, the thing here is that credit card issuers, when they start looking at your application, and they ask very specific questions before granting you the car that you need. They want to see how much you're spending, and part of your expenses will be based on your household expenses, right? If you have children, chances are your expenses will be higher than if you were if you had no child yet, right? It's all about your expenses, your household expenses, your spending patterns. If you go on vacation, or you just you like to live, let's say, I would say be a very, very, I'm not going to say actually saving a lot of cash. So my point here is what? My point is that when we talk about having low income and still qualify for a credit card, the lender will pay attention to the kind of cash you currently have. What is your savings potential? How much you have? In other words, how long can you survive if you were to go for 5 days, 5 weeks, 5 months without a job? That's called emergency funding. Okay. By the way, boss, I want to quickly remind you of today's topic. We're having a quick convo about how to actually qualify for a credit card if you have a low income. Okay, you can still qualify. I want to reassure you right off the bat that you can still qualify, not a problem. But first, you got to pay attention to your income. Second, you have to pay attention to your assets. So when I talk about cash, I'm talking about your assets. That's really what's important. Your assets are really important, right? And so when we talk about assets, it could be cash. It could be maybe you have a car, a fully paid car. It could be let's say a house, or let's say the equity portion of your house if you're still paying a mortgage. So you do have some assets. and the lenders will pay attention to that. They will pay attention to those elements when actually considering your credit card application. So don't be desperate. Do not panic. If you have low income, you still have stuff to really take care of, and those things will help you qualify for a credit card with no problem. Here is the approach I really want you to pay attention to. Okay. And the big question here is that how much income do you really need for a credit card, right? That's the big question. Well, based on our research, the minimum, if you have like $750 per month gross income, you can qualify for a credit card, not a problem. Now, $750, that's actually the amount you can qualify that you can have. But the $750 applies for credit unions. And if you want to go with a regular bank, $1,000 is about decent. Again, but I want to go back to what I said before. It's not about the income you're making. It's about your DTI, boss. It's about your DTI. A lot of folks see people trying to razzle dazzle you, telling you, hey, your income is still low. You can't qualify for a credit card. Okay, but the next time somebody's telling you this, tell them I said that, and I'm saying this based, like I'm saying this, standing on the shoulders of our team members who have been researching this topic for the last 35 years. Boss, 35 years. Okay, so what I'm telling you is pretty solid. Okay, tell them that it's not about the income. It's about the DTI, my debt to income ratio. Credit card, boss. Credit card. My question to you is, how many credit cards you currently have? Because you're looking for a low income credit card. I mean, not low income credit card. You are looking for a credit card with low income. But how many credit cards do you currently have? Do you have a secure credit cards? Do you have secured credit cards? Do you have other credit cards? So because those credit cards, if you have balances on them, open balances on them, they might actually be accounted for when it comes to your DTI, right? Not your DTI, your CUR, your credit utilization ratio. Those two elements are kind of important. Your DTI and your CUR. So when we talk about your DTI and CUR, those two elements actually paint a picture of financial responsibility or financial recklessness. It's really important to remember that the credit card issuer is paying attention to how much you spend, what you spend the cash on, like your spending patterns, okay, and your overall asset, as I just said. So you want to keep your DTI and CUR as low as possible. Hopefully, like ideally below 30% if you want to qualify for a credit card with low income. Let me give you the steps I want you to follow right now when it comes to reporting income on a credit card application. So obviously you have low income, okay, but you still have some income, right? Something is coming in. Otherwise, you won't be able to live. You will not be able to put food on the table for the children, and you won't be able to maintain a decent life. So chances are you have income somewhere. So there is some logic to follow when it comes to putting data on a credit card application in terms of income. So you can actually put things like personal income, scholarships and grants, allowances and gifts, trust fund distributions. So if your great grand uncle or great grand aunt has actually set up a fund for you, and that fund is distributing cash every month or every 2 weeks or every quarter, that actually constitutes income. If you have retirement fund distributions, those constitutes income. Social security benefits, that's the income also. Okay. By the way, boss, I want to quickly remind you of today's topic. We're having a convo about low income, how to get a credit card, how to get a high limit credit card, by the way, and how to qualify no matter what. So the thing is, when we talk about the constellation of income, just make sure that you put the right income. But I want to insist on the fact that I'll never lie on a credit card application. Never lie on a credit card application, okay? Especially when it comes to your income. Because even if the credit card issuer cannot really find out, it's really bad. It's not only bad from a legal perspective because you could be sued, your ass could be sued, but it's also really bad from a moral perspective because, see, you are lying to the lender to give you high limits. But what if they found out later on that you never had that income in the first place? So it's just really bad, and don't do this at all. Okay. One thing I want to say here is that do not forget, if you choose to include the various sources of income that I just listed on your application, you are saying that you are able to use this money to pay back your debt, right? To never include income that you don't have full access to, or don't plan on tapping if necessary. So there has to be the money what you're calling income must actually provide revenue for you on a consistent basis. You must have access to that cash. Let me give you the decision that you have to really pay attention to. See, the whole thing here is that when you are looking for if you have low income and you're looking for a credit card, there is some special consideration that you have to think about if you're a student. If you're a student, you got to really think about your income level. And like, let's say you are between 18 to 25 or 24, you are a full-time student or part-time student, doesn't really matter, but your situation is your income is currently low because you're going to school, because you're focusing on your studies for now. But you need a credit card to survive. But let's say you want a credit card to build credit, yeah, and you need a credit card to actually track your expenses. What you want to do here is that you want to be in a situation where you are applying for, you first try to apply for credit cards that are specifically designed for students. A lot of banks and credit unions, for that matter, they actually have credit cards specifically geared towards students. Go for those cards first, because the eligibility requirements are, I would say, they're not as strict as just general purpose credit cards. And what you want to do here also is that you want to actually start with a bank or credit union where you already have a relationship. That way you can parlay that great relationship. Hopefully you can parlay that great relationship into a credit card application, into a successful credit card application. And so, but if you don't have a relationship yet, you can just apply for a general purpose credit card. But just make sure that you are able to either have like you can be an authorized user on somebody else's card for now, so you can just build your credit a little bit before you apply on your own, or you can just ask somebody to co-sign or co-apply for you. That way, you always have the support of a more responsible, of a more credit-worthy applicants. So this is kind of cool. And one thing I also want to say here is that you want to always be in a situation where you are asking yourself, okay, if I qualify for this card, will I be able to repay the whatever I charge on the card? Because it's all about, I would say, your DTI. So you got to have a lot of, let's say, not a lot of cash, but some extra cash to be able to repay whatever you charge on the card. Let me give you a few pro tips here. And I think I talked about it before, but I just want to quickly, I want to really go granular on this point again. So what happens if you report the wrong income? See, when we talk about wrong income, there are two ways to actually analyze this thing. So wrong income can mean like, okay, you made a mistake, you made an honest mistake. And the second part is that you actually made an intentional, it's not a mistake, but you actually intentionally lied about your income. I explained already the fact that you lied about your income, and this is really bad. You can be prosecuted. You can be sued. Your ass can go to jail. It's really not good. Don't do it at all. Okay. If the credit card issuer finds out later on that you actually lied on your application, they can revoke the card at once. They can actually have there is a constellation of a very, very drastic decisions that they can make. Don't do this at all. Okay. Do not do this. And so that's for the fraudulent reporting of income on your credit card application. But what about, let's say, you actually made an honest mistake? When you make an honest mistake, what you want to do here is that if you actually if you qualify, then it's okay. So in other words, if you made a mistake and the credit card issuer didn't catch it, that's fine. You get the card. But once you get the card, and you set up your account online, what you want to do is you want to log into your account. You want to go into your dashboard, and you want to put the right income in the income box on your dashboard. That way, your permanent records are accurate. Okay, if you made an honest mistake and they didn't catch it, that's fine. But if they did catch it, just say it was an honest mistake and provide a proof of your income, like your W-2s, your 1099. Just tell them, okay, it's not about having a big fuss. Don't make a fuss about the whole thing. No, you made a mistake. It was an honest mistake. You're not trying to game the system. It wasn't as if like you were just sitting around and just say, listen, I'm gonna game the system. No, you did not try to game the system. You made an honest mistake and just provide proof that, hey, listen, here is how much I'm making, and here is a proof. And one thing I want to say before closing into this conversation here is that if you have low income and you need a credit card, I have great news for you. Why? Because like up until 2010, like 10 years ago or more than 10 years ago, credit cards were issued only by banks and credit unions. So you did have a gap in the market, because if you don't qualify for credit card issues by credit cards issued by those two types of institution, you are toast, right? And or if you have a problem with check systems or telecheck or early warning services, then you are toast. The good thing is that, and the good news is that nowadays you can qualify for a credit card from a fintech. So you have a constellation of fintechs that actually have credit cards on the market. It's really a great opportunity to actually qualify for those credit cards. Okay, so you want to expand your horizons. You want to see if you can qualify for a credit card, for a low-income credit card with a high limit, with other players. For example, you have Upgrade, you have Update, you have Ava, you have a lot of credit cards. I mean, so forget about your traditional lenders, forget about the Chase of the world, forget about the Bank of America of the world, forget about the Wells Fargo of the world, forget about the Citibank of the world, or even forget about the mid-level players. Forget about the PNC, the Truist, forget about the US Bank, the Fifth Third Bank, the BMO, the TT Bank, the Capital One. Forget about those. You want to go with online lenders, okay? And what we love about online lenders in general is that they try to really innovate. They bring their own innovative, I would say, patterns, innovative lifestyle, innovative underwriting style into the whole equation. So they're able to actually look at things like your resume, your education profile to approve you for a credit card, which means that even if you have a low income right now and where you have some kind of solid education, you can still qualify for a decent limits credit card, okay? And when you really think about this, so you need anyway. You need to have access to a credit card. You need to have access to cash, and you want to make sure that you have access to that cash real quick, if you will, and regardless of your income level. So this is kind of cool. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to qualify for a credit card if you have low income and you need a high limit credit card. How do you actually navigate the system? How do you actually make sure that you get approved right off the bat? And so I give you the overview, the approach, the steps you need to take, the decisions you need to actually think about, and the pro tips. Thank you. God bless you. I'll speak to you another time. But until then, remember, stay marvelous.